So you may be wondering, what is OPM and why do you need it? OPM stands for other people's money, and if you want to invest in real estate, it's definitely something you're going to need to get acquainted with. There are a few different types, as I mentioned earlier, but I want to talk about the top two, the two that you should be going after now. Whether you've done a few deals or never done a deal before, you need to get acquainted with OPM, and you need to learn to talk the talk and walk the walk. The specific OPM we're going to talk about today is short-term lending. We're going to talk about private lenders, and we're going to talk about hard money lenders. These are people that are going to lend you money on a short-term basis to buy distressed properties and to fix up distressed properties. There's small local banks that you can go to for the long-term portion, but that's not what today's video is about. Today is about finding those short-term lenders so you can get properties under contract quickly. Whether you want to wholesale them, whether you want to flip them, or whether you want to keep them as rentals, you need to get them under contract and need somebody else to pay for it. Why do you need OPM? Well, there's two reasons why. Number one, you don't have the money. As I said earlier, I've literally bought $40 million worth of real estate without using any of my own money. And while I've done pretty well for myself, I did not have enough money to put 20% down or to fund all those deals. That kind of leads into the second part. Even if you do have money, it's really hard to scale at any level unless you have like way more than you know what to do with, which doesn't really apply to 99.99% of us. So if you don't have money like most of us, or you have a little bit of money but want to scale quickly, you need OPM and you need this video. Make sure to give this video a like if you have not at this point. I promise I'm gonna bring the heat. You bring the like button. All right, let's talk about private lenders and then we'll get into hard money lenders. I want to talk about who are private lenders, how to find them, pros and cons, what their rates are, and what to bring to your first meeting with a private money lender. First, who are they? Private money lenders are usually somebody you know or somebody in your network or somebody in your network's network. Private lenders are people that have extra money that want to invest in real estate. It's usually not a rich uncle or your parents. It's usually somebody you know that has money. It can be your network or the network right outside of that. I literally just had a student yesterday text me saying that they were talking to a real estate agent about finding deals. And that agent said, I've done pretty well. I got a little bit of extra money I don't want to put in the stock market right now, and I don't believe in crypto. So I would be willing to be your private lender. And that agent ended up giving him $200,000 on a private money loan. So you never know who's gonna have the money. It can be an insurance agent. It can be your neighbor's boss. It can be your parents' neighbor. It can be your grandparents. It can be a lot of different people. And you're not gonna find them unless they know you're looking. They're not just gonna fall out of a tree and hit you on the head. You need to go out and find them by texting, by talking, by posting on social media, by at the bar on Friday with your friends talking about real estate, by posting about it on social media, by a ton of different ways. You just need to put it out there in the universe. Not that the universe is going to magically send it to you. However, the more people that know you're investing in real estate, eventually it's going to go through somebody's ear that has money and that's willing to invest, and hopefully you and them can set up an initial meeting. Whether it takes you 2 months or 2 years to find a private money lender, you need to find one. In the meantime, there's other things you can do, but always be looking for private lenders. I already talked about where to find them, but like I said, it's going to be a relationship-based type of introduction. You're going to be talking about it a lot. You're going to be posting about it. You're going to be doing things. And as you do deals, either with other funding sources or wholesales or whatever it may be, you're going to start to make connections with people that are willing to lend you money. At our local meetup last week, we had 3 people stand up at the beginning. At the beginning of our meetups, we let people stand up and say, I'm looking for this, or I have this. And 3 separate people said they have extra money to lend on a private money lending type situation. So you need to go meet people, you need to talk to people, and eventually you will find a private lender. It's just somebody that has money that either believes in you and or believes in real estate as an alternative investment, because as I'm getting ready to explain, it is the best investment for them. It's the safest place for their money aside from a savings account, although savings accounts are usually only insured up to $250,000. And the return you get on a savings account is literally a loss of money with any type of inflation, even a small amount of inflation. All right, let's go over the pros and cons, the rates, and then we're gonna talk about what you bring to your first meeting. Some pros, and there's a ton of them when it comes to private money lenders. This is my favorite source by far, but they're flexible. I remember my very first loan with a private lender. We did the Burrs method and we didn't quite have enough to refinance out. We were about $1,500 short of paying him back back his principal plus interest. We had some interest paid back, but not the whole thing. He was flexible. He understood. He said we could pay him then, or we could roll that into the next deal with a little added interest. So we ended up doing that. We ended up doing a lot better on the next deal and was able to pull out a lot more cash. So we paid him back that extra $1,500 aside from everything else we owed him, plus a little interest on top of that. So it worked out for everybody because these are people that you have relationships with. They're not big corporations. They understand that things happen and they're flexible. They're also super easy to deal with. When I get my private lending checks most of the time, I have a few different private lenders, but I usually meet Steve, our main private lender. We meet at a bar. He has a couple Guinnesses, I have a couple Tito's, he gives me a check. 90, 120, 150 days later, I meet him back, usually at the same bar. He usually has some Guinness, I usually have some Tito's, and then I give him a check plus interest. So it's fun, you get to know them, and they're super easy to deal with. They also have lower rates. I'm gonna talk about rates for private lenders here in a minute, then hard money lenders here in a few minutes, but they have the best rates for short-term funding. And lastly, and maybe my favorite part about it, aside from the drinks, is it's a balloon payment. And what I mean by that is you borrow the money from them to buy and hopefully fix up a property. And then you do not owe them a dime until you either refinance equity and cash out and pay them back, or if you're flipping the property, you sell it. You don't owe them anything until you receive the profits, so there's never anything out of pocket, even on a short-term basis, and that's different than what hard money lenders require. There are a few cons of private lenders, not a ton. One of them is they're a little bit harder to find. As I'm getting ready to tell you, hard money lenders are super easy to find. Private money lenders require a little more work, but the upside is there. It's worth the effort. And also the legalities and paperwork will fall on you most of the time. Not always, sometimes they'll have paperwork, but in general, you're just gonna have to put in a little more work to make sure everything's buttoned up legally and paperwork wise. All right, on to their interest rates they get, and then we're gonna talk about a great little packet and information I have for you and deliverables in your first meeting with them to impress them so they give you money. Their rates are usually 8 to 12% annualized. Not going to go into detail in that. Just know that if they have the money out for 3 months, you're not paying them 12% on that. You're paying them a portion of that 12%. It's annualized, which is higher than like long-term money at the bank, but banks don't want anything to do with loans like this. Banks aren't going to lend you money on properties that you don't live in, and especially properties that aren't fixed up. All right, there's two main things you're gonna wanna bring to that initial meeting with a private lender. Whether you're meeting them at your office, at your house, at their house, at a bar, wherever it is, you need to come prepared. Even if you're meeting your mom or your dad or your grandparents, especially if you're meeting somebody you don't know, you have to treat this like a business meeting, even if there's a really strong, long prior relationship developed. The first thing you're gonna need to bring, and something you can have a little fun with, especially if you know them, is an agenda. We always have an agenda when we come to our private lender meetings. It's just something we put on a Word document that's maybe 5 or 10 bullets long. Sometimes we have fun with it if we know the private lender pretty well, but I think our last one had, meeting, high five wasn't on the agenda, grab a drink was on the agenda, and then it was, of course, talk about overall property returns, talk about the market, go over an example deal, and just things like that. You can set it up as you get to know them a little bit better, but your initial agenda with them can be pretty simple, but just having that agenda will go a long way, I promise. It will show them that you're prepared, and it will keep some type of timeline for your meeting so you're not going off on all these tangents. You can have something like market discussion, a little bit about me, example deals, and then some of the things I'm getting ready to talk about. Something simple is fine, but having it is better than not. All right, next, you need to bring some type of business presentation, business plan. It can be on PowerPoint, and probably should be on PowerPoint. You can put it in a Word document if you'd like, but when we meet at bars with people, if we don't have a TV and a monitor to pull up, we just print out the PowerPoint presentation, 1 page per slide, and just walk through it and have it in, we have a copy and they have a copy, and we walk through it. So having something like that in addition to the agenda will go a long way. Have your business plan on there. Even if you don't really have one, make one. This is a good time to do that. It doesn't have to be complicated. Your goals, how many properties you want to have in 5 years, in 3 years, in 1 year. How are you going to find the properties? Where are you going to find the properties? Just something that kind of lets them know you have a direction you're going in. That direction can change, but at least have a direction and show them that. Then you're going to want to have some example deals. Say, hey, if I get this property, it can be a real deal that you have under contract or one you're looking at, or a made up one, but just generally walk them through the type of deals that you're wanting to do. properties in this price range that need about this much work with my exit strategy of wholesaling or flipping or renting. Whatever it is, walk them through an example deal with their return so they can kind of visualize what they'll be getting. You're gonna have to work through the numbers and figure out how to pay annualized rates and all that kind of stuff. Super simple, just Google it, but show them an example of, hey, you lend me $200,000 to buy and fix up a property. I'll get your money back in 4 months. You'll get your $200,000 plus this much return. And that may sound great to them, but they may think, are you really gonna do that? And how am I protected? And this is where it's exciting. These are the 4 things you tell them or have in your presentation that will show them that you mean business and that will protect them and show them that this is safer than a savings account investment, but the returns are 1,000 times better than a savings account. The first thing you're gonna do is you're gonna personally guarantee the property. You can have a lawyer draw up a personal guarantee, they can have one, or you can just look one up online. But basically, you're putting your butt on the line, but you're personally guarantee the fact that you will get them their money back no matter what. So this will supersede any LLC documentation you have. You can't just say, oh, I own an LLC, I didn't pay you back, sorry, sue my LLC. No, you're gonna personally guarantee it. I still do it to this day with my private lenders and sometimes even with some of the banks. You gotta put your butt on the line. You gotta let them know that you mean business, and literally personally guaranteeing your personal name that you're gonna pay them back your personal assets will give them a lot of assurance. Eventually, they may not ask for it, but they probably will, and hey, it's just something you gotta do. You're buying real estate without using any of your own money, so you're gonna have to do some things like this. Number 2 is you create a promissory note. And again, I talked a little bit earlier about having the documentation, that being a little bit harder. There's things online, talk to other investors. There's places you can find these promissory notes. The promissory note's gonna lay out the terms and the interest and everything, and it's also gonna put your LLC on the line to legally pay them back. Third, you're gonna add them as an additional insured on the insurance certificate. So if the property burns down or something happens, the insurance company writes the check to them and you, not just to you. So they have some say in that money. It's something that's super easy to do, doesn't cost you a dime. When you get the property insured, you just tell them to add this person with their address as an additional insured. So it just gives them a little bit more assurance that it's a good investment and that their investment is safe. Fourthly is not a word, but anyways, lastly, you can put them on the deed, meaning they have some type of ownership in the property. So if you get hit by a bus, the property doesn't go into probate or to somebody else, it goes to them because they have ownership because of the money they're giving you. Now, when you sell it or refinance it, this goes away. You can do a few different things. It might kind of depend on your state, but having some type of deed that they have their name on, or even they have some type of mortgage lien on the property, just lets them be next in line if something happens to you and avoids a lot of legalities if something horrible happens that they can foreclose and take over the property. So those 4 things should give them a ton of assurance. They don't have any other investment out there that has that type of assurance with potential double-digit return. So it's a great investment for you, great investment for them, backed by real estate, a great way for you to get in the game and scale without using any of your own money, and a great way to provide a great return to these lenders. They're not doing you a favor. If anything, you're doing them a favor. Lastly, and then we're gonna get on to hard money lending, is you ask for some type of commitment level. You don't need them to write you a check there on the spot, but you need to get some type of commitment level from them. Based on what we've talked about, what are you thinking? Are you thinking this is something you're gonna wanna pursue? What kind of questions do you have? How can I make this make sense to you where it's a great deal for both of us? Just continue that conversation and ask for any type of commitment level. They may be ready. Yeah, I'm ready to go. Let's start to drop the paperwork. Or they may say, I need to think about it. Either way, you need to know where they stand. So you need to know your next moves to move on and stop wasting both of your time, or know what to double down on to make them feel assured. Okay, now let's talk about hard money lenders, because it may take you a while to find a private money lender. I promise you can. Don't give up. But it may take you a while to find one. You can find a hard money lender in 5 minutes, I promise. All right, let's work through the same cadence of topics that we talked about with private lenders with hard money lenders. Who are they? They are businesses that are in business to lend money on a short-term basis on distressed properties to new real estate investors. So they are in business to do exactly what you want. Private money lenders are awesome, but a lot of the times you're going to have to convince them to get in the real estate investing game, even though it's passive. Hard money lenders know how amazing real estate is, and they know it's a great investment, and they know they're protected, so they're already there. You just got to meet them and convince them to lend you money. They usually borrow money from some type of fund or bank at a low interest rate and then charge a higher interest rate to you, so they make money on the arbitrage. And of course, they're going to be protected in the same ways that private money lenders are protected, so I'm not going to go into that. Those last last 4 things I talked about with private money lenders. Hard money lenders are going to want the same thing. They know the game, but private money lenders didn't know that, so you had to bring that to their attention. Where do you find them? Pretty darn easy. You literally type in hard money lenders near me on Google. Google knows where you are, or you type in your city hard money lenders. There's going to be some ads that pop up of some national hard money lenders that you can use. And then there's also going to be the local hard money lenders that will pop up. I always suggest going local first if possible. They're going to have an office there. You're going to meet them. You're going to be able to have an in-person relationship, which is always best. But simply Googling them, you will find them. Also, in your local real estate investing Facebook groups that I always talk about going to meet other people, there's going to be hard money lenders in those. Finally, you're going to find hard money lenders at your local meetups. Our local meetup usually has 2 or 3 really good local hard money lenders that come to promote their business. So they're out there. They're super easy to find. Shoot, in my mentorship, you get access to one of our hard money lenders that will lend in almost every single state. So these guys are super easy to find. Let's do some pros and cons now. I just mentioned they're super easy to find. You don't have to put in a ton of effort. The cons are a little bit more than private money lenders, and it costs a little bit more, but minimal effort is needed to find these. They have super deep pockets as well. It's not an individual that's an insurance agent that's got a couple of hundred extra thousand. These are usually, like I said, companies that have millions and millions of dollars on the street. They're probably going to start you out small as how much they'll lend you, but eventually they can lend you a lot of money. The most we've ever gotten from a hard money lender is a $1.5 million loan. Our private lenders wouldn't really be comfortable doing that, at least not at the time. My favorite pro to dealing with hard money lenders is they're a second set of eyes. They don't want to take over the property, and they want to only lend a safe amount on a good investment. So most likely, especially if it's a local one, they're going to walk the property with you. So they're going to go look at it. They're going to confirm your ARV or after repair value, what the house is going to be worth after it's fixed up. They're going to give you what they think it's going to be worth. It's probably conservative, but it's at least another opinion. They're also going to give you their opinion on the rehab budget. If you're newer to this, your rehab budget could be way high or way low or right on. Again, they're going to be conservative on this, but you're probably going to have somebody else, somebody that has walked hundreds, if not thousands of properties, walk this property with you for free. Well, you're not paying for that walk or that consultation. You're going to pay for it when you pay them interest, but it's a great way to have a second set of eyes on a property. And lastly, they handle all the legalities and all the paperwork for you. You need to review it. You probably don't have to have a lawyer review it, but you definitely can if that would make you feel comfortable. They want to protect you and them. They don't want a bad reputation of having horrible contracts. They do take care of all the paperwork and legalities, which is nice. All right, on to the cons. There's a few of them. None of them are deal breakers in my opinions, but I want you to be aware of them. Number one is they usually won't fund 100% of the purchase and 100% of the rehab ever. Sometimes they eventually will, but usually never right away. You have to develop a relationship with them, and then eventually they may fund 100% of everything, but most likely they won't. So you're going to have to come up with some money. It can be money that you have in the bank. It can be a line of credit you have on your house or a business. It can be money from a private money lender. Whatever it is, you're probably going to have to come up with some money to the table. Now, a lot of times they'll lend 80 or 90% of purchase price and 100% of rehab right off the bat. So you're not going to have to come up with a ton of money, but you're going to have to come up with at least a little bit of money. And that's not the end of the world, because you're going to get that back when you resell it. You're going to, being your own bank or being your own lender, or somebody else is lending you money, they're going to get it back, or you're going to get it back when you sell it or rent it, but it does have to come out of pocket for a little bit. Along those lines, they're going to ask for monthly payments, usually 1%. So if you're borrowing $100,000 from a hard money lender, they're probably going to require monthly payments of $1,000 a month. Again, you can use those sources I just talked about to fund that part, but you're going to have to come out of pocket, and it does come off of the loan and interest. So it's not like it's wasted money, but it's going to come out of pocket during the process. They also have higher interest rates. I'm getting ready to explain what those are, but the rates are higher. And lastly, there's a lot more underwriting involved. I probably should have hit on this a little bit more on the private money lending section, because it's a relationship and they'll just lend you. I've never met a private lender that looks at your credit score or your income statements, but guess what? Hard money lenders are going to want to look at that. They're going to want to be protected. They're going to want to look at your income. They're going to want your tax returns. They're going to look at your income, your pay stub. They're probably maybe even going to want to look at your bank account, and they're probably going to want you to have some liquid cash in case things happen. So there's more of an underwriting process that's harder to get approved with a hard money lender than a private money lender, because that private money lender is relationship based. That hard money lender is basing the deal just on the quality of the deal and the quality of you. All right, on to the rates, and then we're going to talk about about what you need to be prepared for in your first meeting with hard money lenders. Their rates are usually, like I said, higher, that 12 to 20% total. Now that may sound like a lot, but if you don't have the money and you don't have any option, I would still do it. If you got a really good deal, and even with paying this higher interest rate, you're still gonna be able to refinance out, or you got a really good flip coming up that you can make a lot of money on, still just take this deal on and pay this higher interest. So you're gonna net $35,000 because you paid a lot to this hard money lender. Would you rather have $0 or $35,000? Obviously, in an ideal world, with that example, you have all the cash in the world and you netted 50 grand, but that's not usually the case. So just think of it as a cost of doing business and just add it to your rehab calculator and just get over it, move past it. Eventually, you might be able to negotiate rates, or you're gonna find private money lenders. Also, they may have points as a part of the process. I don't wanna go into a ton of details on that, but basically it's just more money that they're gonna ask for. So if they lend you money at, let's say, 12% plus 3 points, that means they're gonna lend you the money and their interest is gonna be 12% annualized on that investment, but they're gonna want 3 points or 3 percentage points on the back end. So you're gonna pay them 12%, and if it's a $100,000 loan, they're gonna get $3,000 at the end for doing the deal. That's kind of usually their profit margin, because as I mentioned earlier, they borrow money cheap, loan it out higher, and they do have expenses in the middle. So just don't be thrown off by points. All right, what do you bring to the first meeting? This one probably isn't as exciting as your private lender money first meeting, because it's probably not gonna be at a bar, but you're already gonna have filled out some paperwork with them. You're gonna meet them, you're gonna call them, whatever you're gonna do, they're gonna send you an email with an application to fill out, and they're gonna review that application probably before they set up that first in-person meeting with you. And in that application, they're gonna ask for a lot of what I talked about earlier. They're gonna want some personal information, any business information. They're probably gonna want you to have started an LLC. Most won't lend to personal individuals. And they're gonna wanna somewhat approve you before they bring you in the door, because they have, like most businesses, not unlimited resources, and they don't wanna be bringing in a bunch of people that they will never lend money to. They want to make sure you're gonna be a good borrower and you know what you're doing before they bring you in and potentially lend you money. So they're gonna want all that stuff, your ID, your bank statements, your W-2s, your tax returns, all that stuff they're gonna look at and they're gonna review before that first meeting. But when you come to that first meeting, you need to be prepared. Similar to that private money presentation you did, you need to come with a presentation. You can do the agenda if you want, probably don't need it for this, maybe it wouldn't hurt, but definitely have a business plan and try to have it somewhat buttoned up. Again, you don't have to stick to this business plan. It's not tattooed on your forehead. It's something that can change, but put some effort into it. Put some goals out there, your long-term goals, your short-term goals, any other resources that you have, your parents or your friend or somebody you know is invested that's gonna help you, or you've done some deals yourself. Just sell yourself, sell your business, talk about what you've done that's great, talk about your success in the past, either at your job or other businesses. Bring the heat and talk about what type of deals you wanna buy, why you wanna buy them. Just come with everything you can, a business plan broken out with your goals. I would tell them my first quarter goals are this, my second quarter, or whatever time you're meeting them, talk about quarterly goals, maybe even weekly goals, then talk about monthly and yearly and all those type of things. Just come together with some type of presentation that talks about why you're getting into business and what you're gonna do to be successful. That can change, but have something. If you do that, you have a much higher chance of getting money from the private lender and the hard money lender. Finally, ask for some type of line of credit. They may say, all right, we're approving you up to $250,000 or $350 or $100, whatever it may be. Say, when will I know what type of line of credit I'm gonna get? Now, they're gonna still have to review the property, they're still gonna walk it, but typically they'll say, we will lend you up to $350,000, X% of purchase price plus 100% of repairs, pending approval. So they're gonna probably wanna walk that property and they're gonna confirm the ARV, as I said, and then confirm the rehab. So it's not a blanket approval, it is just a guidance limit for you to go up to. Then they're gonna look at the property and make sure they're willing to lend on and make sure it's a good deal for both of you. Even if you don't have your money lined up, always be looking for deals. Worst case scenario, you get a deal under contract and you can wholesale it out if your money's not lined up yet. Vice versa, if you don't have deals yet, but you have money lined up, that's great. You can put better offers on properties, knowing that you either have a private money lender or a hard money lender potentially to back you up. So it's not do this first, that second, it's do them both at the same time. always be looking for multiple money sources and always be looking for deals. You will figure it out. Having this money in the background just allows you to have the right exit strategy. If you don't have your money lined up, you might have to wholesale a deal that would have made a great rental or a great flip. Having that money just gives you more opportunities to do the right exit strategy that makes you the most money or that fits your business plan the best. So if you found any value out of this video, please hit that like button if you have not, and subscribe to this channel. I come out with this stuff all the time and also go live a lot and teach you actionable steps on how to do this. Also, check out this video over here where I walk you through a real property, show you befores and afters, show you the numbers, peel back the curtains on what a perfect or pretty good BRRRR deal looks like. See you on the next one.